So look, it's tough to be the last panel of the day, but then we have a fantastic panel. So I'm pretty sure the idea is that we're going to move quickly through 2-3 questions and hopefully keep your attention before we open it up for Q&A from the floor. And we have a great combination of developers, project development financiers, and of course Angela from the Africa Development Bank. So you'll get a different perspectives on some of these issues. So clearly, through the day we've been through several different parts of the project development chain. We're at the point of discussing, okay, so what are the financing availability, for project development? We've also identified some weaknesses currently in the framework, but we've also come up with some ideas in terms of how to go forward with the help of the development finance institutions. And also there are other partners that are starting to play into Africa. It's fantastic, just to see this group convened for African project development and infrastructure is something that we would not have seen a few years ago, and that itself shows the interest here. With that, let me open it up to the floor, because I'm sure there are many questions about, for the panel about what we could do even better on the financing side. So please feel free to raise your hand, and hopefully we'll get you a mic. Yeah, Alain is going to start us off.
Yeah, I'd like to do that, but just in case too many speakers. My name is Alain. Somebody doesn't want me to speak?
We can hear you, Alain.
Yeah, okay. Let me see. Maybe I don't need a mic. Better no? Okay, it's working. So my name is Alain Bobisse. I'm the global head for IFC Infra Ventures and the lead sponsor for this event. And again, I'm very happy to be here. But one question that I had, in fact, I'd like to pose the question to either Raymond, Brian, and you, Reginald, I think, from GE. So we welcome the entry of players, EPC contractors, equipment manufacturers into the project development cycle as developers, because I guess the more the merrier. But there's some tensions between developers and EPC contractors or equipment suppliers in the development process. I guess developers like to have the ability to run competitive bidding processes to select the EPC. But at the same time, there's value from the EPC guys to come in the earlier stage. So I'd like to understand the dynamic. What do you prefer? Do you prefer to go it alone and develop the project and later select an EPC contractor? Or would you, partner from the get-go with an EPC contractor? And what are the pluses and minuses? Raymond seems to want to start.
Well, I think if you take a look at our model, we include everything. So that means that you're going to see me or some of my colleagues on every side of the table. So we develop, we build, we operate, and then we are also the co-investor. So some people may say, I guess you guys are taking us for a ride now, huh? We have to be extremely careful and transparent at all stages, and when issues are being dealt with that is conflicting, then we leave the room. We have done that a few times. So once people get over the experience of the model, where it works, and it has worked most of the time, they come back. And that allows us, when we're looking at an opportunity, to do we call it a global IRR calculation, where we look at the returns of all the stakeholders. And we can maneuver a bit in between the various developer fee, for example, EPC margin, or the IRR that you get from selling the electricity. The advantage of that is that you reduce the number of stakeholders, you standardize on the contracts, and you can mitigate any aspects, and I'm telling you, they happen all the time, while you're at it, before, and moving towards financial close. As a reference, and it's not that bad everywhere, but in our first project in South Africa, we had 150 legal agreements. We were the largest customer of the largest law firm in this country. Crazy, isn't it? So we need to standardize, and there is no reason, when you look down the road, that electricity is going to cost more in Africa than elsewhere. So our model, I think, is focused on a further reduction and an increased competitiveness, so that at the end of the day, the consumers are going to enjoy the lower tariff.
Yeah, it's a tough question. Look, I think solar is a different business because I think the construction is a bit more straightforward. At the end of the day, I can define an EPC contract. My contractor friends can define an EPC contract. The devil's in the detail. Having someone sit at the table with me, I like the idea. I like the early engineering input. I like the contribution. But I don't know whose contract they want to sign at the end of the day. My EPC version of a contract or their EPC version of a contract. It's difficult. We haven't done it yet. We'd like to keep the right to ensure we can negotiate what we want. But if there's only one of me, not three of me. If I'm only sitting on one side of the table in this, I need to negotiate the contract that I need. And EPC is about as devil in the detail as you get. So it's very difficult. I've had a lot of conversations with GE, for instance, and it's necessary sometimes to get the EPCs involved much earlier. Take our project in Ethiopia, which is a pipeline. I have to give a price to get my offtake contract. It's not something I can model. I need to know the geotech work. I need to know. There's so much I need to know about the route before I can go and give an actual price. So I have to bring the EPC in earlier. Now it gets into what form. Do I want them putting up, risk dollars as a equity investor? Do I want them putting up risk dollars as sort of a form of a loan, something that they recover later? Well, yeah, I have to think about that. The equity, sometimes it doesn't align us because at the end of the day, then you're really getting into the hard negotiations. So I think it's great that all the models are under consideration. And I think every project's different. I think if you're going into a power plant where it's been done before multiple times, you can look at it one way. If you're going into a pipeline where there's just external factors that you need to know, you have to look at it a different way. So, I was smiling when you asked the question because it's a great question, but not an easy answer. I think you need flexibility. I think the fact that you have the options now is terrific.
Yeah, I think I agree with Brian. I think it's a moving target in as much as we have preference for certain EPCs, and I think some EPCs have a certain preference for GE equipment. And I think the story goes on. We're currently involved in discussions presently where we're having issues with EPCs around, again, contractual issues, contribution of development dollars and what that means going forward. I don't think one can define a business model as such, when one kind of looks at partner selection and how they kind of unpack a project. I think it's really based on country, the type of sector. Is it a rail project? Is it power? And so forth and so on. And I think that really defines, who you bring in at the beginning or at the early stage, and how you work towards a pricing and delivering a more efficient tariff, if you want to say that.
We probably have time for one more question, please.
I had a question about the REI PPP specifically. So I know that Angela mentioned at the end of her remarks that one of the things that makes investment in infrastructure in Africa so attractive is that the returns continue to be high. And so I just wanted to get your thoughts as developers, what you think the sustainability of a program like the REI PPP is as returns go down along with the price of solar dropping.
Raymond, you want to take a crack at that, or Reg?
Yeah, that's a very good question. The uncertainty of the RAN hasn't changed really. The status of the financing in this country hasn't really improved. Hopefully that will happen. You see different players coming in that are playing balance sheet, the balance sheet game, which is perfectly okay. I think in round 4C now you have reached a level where you may see that some of these projects are not financed in terms of the useful project financing. Whether that is going to stop the program in its current nature, I don't know. That could very well happen. So I'm very curious about South Africa. I think I've said before, the country has benefited greatly, and if they can keep up with the infrastructure development as well, it's going to be fantastic. And once the battery factories that are popping up all around the world are going to shave off the peak production and take out its extremely expensive 35% of the installed capacity worldwide, but also big capacity here, you will see a different situation. And you don't really need the lowest tariff. You need predictable players that can actually support the overall programs. But we are at the stepping stone of something extremely interesting. And this country and a lot of African countries are going to benefit from that.
I think you bring up an interesting point. I think it's a debate and a discussion that happens in offices across South Africa today is how low does the tariff go? And again, my view is very simple. The market will find a way. That's what the markets do. Markets will work it. You'll get to a point where your tariff will become unsustainable, and you'll pay the price for that. So I think really the markets will find a way. It will bottom out, and it might even go up. And it might slightly go up because of currency issues, because of political risk and other factors. But I don't see a continued and sustained decline in a proposed tariff on the reprocess, and really that's just how markets work. And I think it is sustainable, and this is exactly how markets should behave. And again, the way markets will react, and I'm not in any way predicting what the future will look like. Some of us will still be there, and some of us won't be there. But that's exactly what it is. But it ends up being a better market with a properly, reliably priced tariff.
Thanks, Reg. So James and Angela, I'm going to, sort of the last question, I'm going to take the option of asking the question myself, which is, James, you mentioned better coordination among the various project preparation facilities when you were talking about the 67. And Angela, this morning we heard about the multiplicity of financiers for projects on the continent. I think, if I'm not mistaken, Azura had something like 19 financiers. And of course, all the challenges of coordinating among those financiers. What are we doing in the DFI community? What do you see happening that leads to better coordination and helping the developers in terms of negotiations with one voice and with common terms? Do you see anything happening, and if not, what can we do?
Well, there's definitely some things happening. For one thing, the ICA Secretariat, the Infrastructure Consortium for Africa, the secretariat that's in AFDB has set up a network of project preparation facilities. And they're trying to get everybody to come to meetings and cooperate and collaborate. And it's just getting off the ground now, but I think it's showing some promise. And I also think that, actually, Hubert and I were talking about this during the break. The network here of private project developers could also benefit from engaging with this network of DFI developers that's beginning to take shape at the AFDB. So I think people realize there's a problem. They're just not quite sure how to fix it yet, but I think we're sort of moving in that direction.
Okay, I suspect that we have a multiplicity of financiers on any one deal because we do have very few bankable projects. We still need to do a lot of work with the governments, reforms, just getting them comfortable with project finance, and also helping them with the procurement. Because I think many of them have now come to the realization that single sourcing is not sustainable for them. And I think they've also been watching South Africa and the success that South Africa has had with the renewable energy. Now, I think DFIs come into their own with the ability to lead, mandated lead arranger status. I think we're trying to do that to a certain extent with your projects in Nigeria. I don't know how it's working so far, but I think it's working well. And also, IFC and ADB have this AEB loan structure that I think IFC has been using it for a while in a number of jurisdictions, not so much in Africa though. But we hope that we can jointly start using that, so it will help a lot with the number of players you have before you on the table. So we are, as an institution, ADB is set up in a way that allows us to maximize the public and private, because we're a single institution. And we leverage different financing instruments in ways that are driven by the Africa's needs. So our core business is drawn from what the government needs. So to a large extent, that helps when we're engaging with the governments. And this has been the basis of our new strategic priorities, what we call the high fives. And I'll take, if you allow me, just 2 minutes, just for you, Sujoy. The high fives are, we're trying to look at Africa's development holistically. We have number one, and I think there'll be homework on this if anybody's not paying attention. Okay, number one is Light Up and Feed Africa, Power Africa. Number two is Feed Africa. Number three is Industrialize Africa. Number four is Integrate Africa. And number five is Improve the Life of Africans. But in all these five, power is really the catalyst. And power is where we're putting a lot of emphasis. The African Development Bank is going to put at your disposal about $12 billion over the next 4 years to try and bring the access levels on the continent up. So we're going to do that in a number of flagship programs, but most importantly, with strategic partners like the World Bank Group, in particular IFC in our case, and Power Africa. So you're welcome to talk to us anytime.
That's fantastic. So I'm told there's a burning question at the back of the room, and we do have time for that. So please.
Thank you. It's not a burning question. I just wanted to ask, particularly the developers, and the last summation by the lady at the end of her presentation. We have seen in the REAP process the prices going way too low. Is this now the moment for South Africa to actually go into a renewable energy feed-in tariff, which can potentially allow local developers who don't have the same balance sheet of the people that are sitting there to actually then participate in a manner that we actually then end up having local players being a player in the market? So the key question to the guys on the table, if we ended up with the refit, is it the time for it? Will you still continue to participate in the market?
And perhaps keep the answers short.
Well, I'll tell you something. When the program started, we established here in Joburg and in Cape Town. After 2 years, we decided to close our German office completely. And we are using the organization that we developed in South Africa for the whole world. The project manager on Joinberg was the project manager on our 100 megawatt project in Utah. So the program is already reaping benefits. We're also sponsoring in a 5-year program the University of Stellenbosch for technology development, using our parks as test or guinea pigs for new technology. So I think, we're not here only for South Africa. we're here, you know, to create an opportunity that goes way beyond what South Africa has created for themselves.
I think a question on feed-in tariff. Yeah, look, there's obviously other factors that, you know, make a market ready for feed-in tariff. You know, not just the tariff. I think Eskom's balance sheet is probably the most pressing issue, and you have a very complicated tariff structure here that effectively has cross subsidies. You know, so there's a big fear that feed-in tariffs will kill some of the cross subsidies of the power structure. Yeah, but across Africa, you're getting a march towards actual costs. To me, feed-in, you know, I moved here with my family. What country is better suited to solar to the home than this country? It's sunny most of the time in this part of the country, at least. So yeah, I think absolutely it's a necessity, and I think you'll see it forced into play. You're starting to see a robust commercial industrial solar play. And if you start to see residential solar, which people are talking about doing for direct use, not a feed-in tariff, those are going to be your higher paying tariff people. And that will really force the conversation because Eskom can't afford to lose those tariff payers. So I think it will happen. I don't think it will happen fast, but I think it will happen over the next few years.
Thanks for those great questions and led to a very engaged discussion over here. So look, from my sort of takeaway from this day and from this discussion is I sort of leave in my mind with, you know, a great group of people working on project development for infrastructure in Africa. And I leave with the 3 Ps, I would say, you know, patience, partnership, and predictability. And I suppose with that, let's give the panel a warm hand. Thank you very much.
Doing business in Africa. You can't afford to be without Africa Investor.